Hey traders, this is Ron Haydat, Market Tamer. Happy Thursday. Hope you're having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We got the spiders up on the chart, down 0.84%, just over $2. We closed below that red line, which is the 20-day exponential moving average. That is 20 days worth of data a month. We are above it, viewed as bullish. We get below it, can't be bullish anymore. At best, it's neutral. Watch the 200-day in purple, and then watch the 50-day in orange. If those two institutional moving averages are breached, then we come all the way back down here to support. I'm not saying it's going to get there. These are just the things we watch for as the price movement unfolds day after day. If we take a look at the diamond DIA, this was down 0.8%, similar to what the SPY was. We closed well below the 20-day EMA in red. Again, target 200 in purple, 50 in orange. Something else to keep an eye on. When the blue line, which is the 5-day EMA, crosses below the red line, which is the 20-day EMA, that's a technical sell signal, just like it was over here. And then over here, it was a buy. And then you can see the run. That's not bad if you use the 520 crossover when you get these big runs, because you're talking, 239 all the way up as high as 260. Yeah, not bad. But if we get a cross here, there's no telling how lower it could go. We could get, back and forth action. But the bottom line is, if that happens, it adds more weight to the end of the short-term bullish case. Looking at the Qs, they took it pretty hard today, down 1.23%. If I zoom in, they're just a little below the 200-day in purple, about 30 cents or so, and we are closed. We have closed below the red line as well. Target 50-day moving average in orange. We get below that. There's a little bit of ledge here, but then otherwise it's down here. So all the indexes are pushing lower. Here's the Russell, down 0.8%, 88%. It already took it on the chin yesterday, so it's not as big a move today, but target's going to be the 50-day, down around 147, another $4 or so. Take a look at some other stocks real quick. Here's FedEx. Some bad news today. The stock rolled over, took out previous lows. Frankly, the target's down in the mid-150s. Not looking good. Today was also a bigger volume event. Something else that broke down that starts with the letter F is FXE, the euro. This gapped lower, closed the lows of the day. Now, volume wasn't extreme, but we just blew out 107.5, gone. I'd have to go back to a 5-year chart and show you the target now, down around 102.5, 101.5. Those previous lows from early 2017 is what we're looking at. So looking to go to Europe, things got a little cheaper today in terms of dollars. Here is Allergan. Now I'm going to move this to a 1-year chart. Bullish engulfing. I'm bringing this one in because there was a spike in volume. We held previous lows and we closed above the 50-day. Gap fill is now a target up around 160. That's over a 10% move. So keep an eye on that one. And CHKP, which is checkpoint. I want to bring this to you because this was a seasonal trade idea. And I said, watch the 50-day. Keep an eye on the 50-day as January comes around. We got up there into January, we pulled back, and then we popped above it on the 28th. From that point, it went from 110, literally straight line, right up into 122. That is a big move. And if I use think back at Thinkorswim, on the 28th, if we take an at-the-money call in April as an example, there's a 510 by 550 bid ask here. That's huge. I could probably do better than that, but let's just say we paid retail 550. If I take you, just to show you the height of it, on 222, watch. So it's 550 at 110, and then we do 222. That 110 is now worth 1160. Better than a sharp stick in the eye, right? That's over a double. So what I like to teach is you get 20%, you can pull, let's say, for example, let's do 3 long calls, paper trading, educational purposes only. First long call off at 20%, second long call off at 100%, third long call, that would be out today because we closed below the red line. So I highlighted this one as well when I was doing those seasonal webinars. I'm going to be looking to hold another one here, but not for a couple weeks yet. And then we'll look at the next group of stocks set to soar or crash because it doesn't really matter. From a directional standpoint, but huge move. This was as easy as pie, just watching this thing go. Now that we finally closed below the red line, now it's over. And if we use CHKP, and we go to April 110, it's still worth $9.30 on the final leg. So one's out at 20%, one's a double, and one's out at still nearly $4. Not bad for a little trade that lasted a whopping month and a week or so, right? So I hope you find these helpful, some of these trade ideas. Again, practice in a paper trading account as always. I'm not a licensed financial advisor. I cannot tell you what to do, and paper trading is free. So I will stop it there. Wish you guys a fantastic Friday and a great weekend ahead, and I'll be back with you in the Sunday video. Take good care.